Good evening, everybody. Hope you're all good. Hope you are all well. And thank you once again for joining me on another Tuesday Avenger call. As always, if someone could just let me know that you can hear me, and say microphone is just played up. Anyway, we will see. Let's see what someone says. Tim says hello. We got quite a bit to talk about this evening, as it had to come to an end at some stage, but we are seeing a bit of a downturn, BTC in the crypto market. It's not just the crypto market, I must say, though. It has spread across traditional finance as well. So we're going to have a look at that. We're going to see whether or not it's Iran's fault, and we'll explore that opportunity there. We'll have a look at what it means for price action. We'll have a look at where some of our favorite altcoins are going and what I've done with my portfolio over the last 7 days. As always, if you have any questions, feel free to drop them in the chat, and there's a little poll going. Just curious as to what everyone's thinking. Are we at a point where we are thinking about sidestepping, selling, whatever term you want to use for it? Are you going to hold through that? Have you gone and tried to borrow money off your grandma to try and buy some more during these dips? Let us know what you've been doing with it or where you think you're going to go over the next few weeks. And I'll try and muddy through the next hour and a half. So, let's move that over there. Here we are with the charts at the moment. BTC is pretty much at the bottom of the range that we've seen for the last month and a half, I suppose. Holding strong. I say strong. Holding. Let's make sure we're sticking to the right terminology here. It's currently holding 63k. We have seen it drop down as low as 61 today. But as you can see when I zoom in on this one, this is the bottom of the trading range. And we're going to talk about what that could mean going forward, where some key levels to have a look at are. But what I would say is there does seem to be fairly a topping pattern of some sort there. But at the moment, as we hold, you could argue, we've also got 3 points here. So right now, kind of where we're looking. Get rid of all those later on. Now, as we dive down to some of the altcoins, they have been leading hard. Not to say our beloved BitTensor has been leading the hardest. I think at one point today it was down 48% from its Binance listing high, which 3%, which of course it inflated up to $800 off the back of that. So correction that we've experienced across the crypto market is amplified there just because we had such a pump a day or two prior to that. But again, we are holding a pretty important level at the moment. That 480 level, it's held as support previously, and it was resistance on the way up back at early February. So again, another very key level. Dive into other levels, and I suppose because this is a lot of people's biggest holding, where we see this one, what has caused this one to have such a bigger correction than others, and is it going to stand the test of time over the next few weeks? Ethereum, Ethereum's pretty much the poster boy for all the other altcoins that are out there. We've seen it replicate the fall from BTC. Again, clinging on to that $3,000 level. We talked a couple of weeks ago about psychological level of dropping below 3,000, maybe even testing to 2.7. And I think, could well be on the way down to that. So we need to just keep our eyes on it. And then my fan favorite, Polkadot, which at the moment it is, it's had a hard fall since the sort of the local tops in March. And we've been down as low as sub $6. We have climbed back up to around about 660 at the moment. But when we go in to have a look at altcoins a little bit later on, you'll see that actually it has kind of lost key support lines. And so we could, again, unfortunately, see some further falling there. I will go through what I'm going to do a little bit later. So let's just very quickly go through the news because there's so much other stuff to talk about right now. And I just want to try and capture a couple of headlines. I think the biggest one, not to add a bit more fear to everybody, but the UK are going to meddle once again with cryptocurrency legislation. Now, we've had 2 attempts at this in the past. We had it in October last year and again last month, March. And it's fair to say that both attempts of those have not been very good for the average retailer dealing with cryptocurrency. We've seen restrictions on marketing activities. We've even seen restrictions on what you can and can't purchase off exchanges. Now, this actually came as a bit of a shock to me because last week, although I wasn't interested in buying any TAO finance, I couldn't find it anywhere. And so I reached out to customer support, and they effectively advised me that due to UK legislation regulation from the FCA. Any new listing, regardless of what it is, regardless if it's been around on another exchange, any new listing is not available to UK residents. Now, I didn't think that was actually the case, but it is, and I sort of back tested it with a couple of tokens that have come out in the last 6 months, and it's true. Can't access it through finance. Now, did I think that was necessarily a problem for Tal? No, I didn't. But it is quite frustrating that should a token we become interested in the future decides that it is going to list just on Binance, we could see ourselves with a problem. There are obviously ways around that, and I don't spend time going through it. But let's just get into this news article. June, they're going to pass another bill, and this time they're targeting stable coins. We don't necessarily know what the legislation is going to be, but if the past two occurrences have been anything to go by, it probably isn't going to be good for us Brits. And the other thing, which is right at the bottom of the announcement, is they're also going to have a look at crypto staking. Again, I don't know what that's going to be, but I can't believe it's going to be anything particularly good. Given that I stake pretty much every single token that I have left, it may have some fundamental impacts to how I actually go forward. So I think it comes out in June, and it'll be ready to pass into law in July. So we just need to keep our eyes on that one forward. Just a little bit on ETS, because it does seem that we aren't seeing the inflows into ETS, spot ETS for Bitcoin, strongly as we had during March and obviously the previous months. In fact, the last couple of weeks have been fairly dry, with only a smattering of purchases predominantly made from BlackRock. It actually got to a point where on Friday, BlackRock was the only show in town. I actually believe that was replicated again yesterday. We don't know what the data is for today. Well, I certainly don't, and we'll find out in 2 hours' time. But Grayscale is still selling. BlackRock is the only people buying. We're actually seeing a couple of days on the trot where we've had net outflows, which they've been relatively small, 1,000 BTC or under. So I'm not suggesting that is anything that is causing this correction. We are seeing is the interest is starting. I hate to use the word dwindle, because that makes it sound like it's flash in the pan, and I certainly hope that isn't the case. But it does seem at the moment that investors or new investors are starting to dry up. And we just need to try and understand how that might impact us going forward. And if we want to actually have a look at ETFs, that's a good question. The total ones. Is that too short? I suppose we've got net inflows. I've got a better chart for that. This is what we got on June. So we're still at around 12.7 billion of net flows since launch. So again, since the 11th of January. And there's over 800,000 Bitcoin that are held by ETF. So again, incredibly large amount of demand at the moment. And about 4% of the circulating supply of BTC is in the hands of ETFs, which is quite amazing, really. But here we go. The past week's worth of outflows is actually down by 100 million, 1 billion. And if we look on the flows one down here, kind of see what that. I'm sorry, it's in black, my colors. But we had a couple of net outflow days last week where Grayscale won. They're selling over so it's easy to see on this one. And then we had yesterday, kind of just see BlackRock of $107 million worth. Grayscale selling at 106 million. Just a slight net positive there. So this is another one. So they've kind of recorded the numbers a little bit differently, but we've had yesterday and Friday. It's actually negative days. 2 ever so slightly positive days, another couple of negative days. So the last 10 days, we've kind of been sitting on par, which, as I say, given where we were first few months of this, we haven't seen a $500 million day since 13th of March, so pretty much a month ago. Yeah, that's sweet. Drying up. But that being said, I do, because just look at what BlackRock have achieved in the last 12 months or so. 272,000 BTC. Grayscale dumping theirs, of course, 310,000. MicroStrategy at 214, FBTC, Tether at 75, publicly traded miners collectively at 39, and Tesla at 12. whilst I think of Tesla, although it's not really part of the news, I do believe they had some mass layoffs today, about 14,000 employees. Fans of Tesla, let's take a look at the charts, maybe see if there is some ideal buying opportunities. And we do have a lot of earnings. Earnings season is about to come out. It kicks off this week. So again, there may be some news in there, which ultimately affects the markets, but particularly if you are looking at investing in stocks such as Tesla. Consider quite enough about that. But got to remember, we talked extensively about it last week, so I don't really want to hark on about it too much. We are days away now from the halvening. Halvening going from 900 BTC a day to 450. And what the point I'm trying to make from this, which again we did discuss the last couple of weeks, is exchanges are coming out and saying, look, we've only got 6 to 9 months worth of BTC on exchanges available. Rate is being purchased, and that pressure is only going to amplify as of next week. And we don't get 900 a day, we only get 450. And so Bybit is suggesting about 9 months worth. I've seen other exchanges say there's only 6 months worth. But the point we're trying to make is there's going to be, regardless what's happened over the last 3 or 4 days, next week, and it may not impact the price straight away next week, but as of next week, that supply squeeze is going to be felt, and it will never go the other way, okay? It's never going to then suddenly magically go back up to 900. It might go slightly above 50, just as the block timings happen. Generally, it's 450. That's what it's going to stay. In 4 years' time, it's going to keep on dropping. So, got that step down. And that typically is why we talk about the halving being such an important event in bull markets, because it leads to to decrease supply, but either increase demand or it's the same amount of demand, forcing the price to go higher. So, that might be the closing statement of today's review of price action. Just thinking about that further higher timelines, the horizon, where we see ourselves in 12, 18 months time, rather than where we see ourselves in 12 to 18 hours time. Just be more consistent when you are nearer the mic. Ooh, okay. Thank you, Chris. Might just be my volume setting. Okay. Thank you. And this is just, we've had a look at this chart before, but this is from Crypto Quant. I haven't signed up to this because I'm not paying £800 a year, so it's a month out of date. This is only to the middle of March. There was just over 2 million. It's a very small number. But if you see where the blue diamond or purple diamond is, just over 2 million on the exchanges. But you can actually see up here, last recorded value, which is much more recent, dipped below 2 million. That's what we were getting at last week. So at 1.93, according to Crypto Quant. But if we use CoinGlass, which isn't as good, but it's free, that's saying it is only 1.74 million, but that's because it doesn't have every exchange. So somewhere between 1.74 and 1.9. I don't want to go over it again. We saw last week, see in this chart here, Bitcoin is leaving exchanges. This is over a couple of years. See, we've almost lost 1 million in the space of 2.5 years. So, okay. Right, so then we're going to get talking about potentially the catalyst of what's happened with price action. So for those of you who are sad like me and you just can't switch off and you're just glued to your phone, you'll have seen on Saturday that the price of Bitcoin corrected. It corrected pretty hard, and whilst there was some saber rattling over the days preceding it, on Saturday it was announced, rather curiously, that Iran had fired a large number of drones and missiles towards Israel. Now, I don't want to turn this into a geopolitical broadcast, and I certainly don't want to be discussing military strategy, because what do I know? But what I will say, before we go into the article, the price action, what did seem a little odd is they announced the attack like 3 or 4 hours before the drones and missiles were due to get there. Kind of felt like they were wanted to be seen to take action, hoping, dear God, that the action they taken didn't actually have any ramifications. And it turned out that the Israelis, with the help of some of their allies, managed to shoot down the majority. I don't know the exact number. Maybe they got all of them. But the surprise attack, in inverted commas, wasn't exactly the success that at least we would have thought Iran would. I think we'll leave it at that. Take your political persuasions whichever way you want from that, and it doesn't necessarily impact what we're going to talk about. But because crypto was the only market that is open 24/7 and it was on a Saturday, our market was the first market to really feel the impact of this. And we started to see a very sharp drop off in the price of Bitcoin. We'll have a look at the charts in a moment. Now, there was a slight recovery on Sunday, but yesterday, as the traditional markets opened, we started to see that there was a further downtick. Now, that's kind of interesting because by Sunday, we kind of knew that the surprise attack, if that's what you want to call it, didn't have the desired effect. And, it felt like, okay, well, I don't want to get political, but both parties have had a bite of the cherry, however you want to do term it. And, that's it. It's fine. But the market didn't see it that way because there was a level of uncertainty. Ironically, Iran came out and said, look, as long as you don't retaliate, we'll see that, we've done what we need to do. Not that is just saying that for the sake of saying that. We didn't really get an indication of whether or not that was how Israel saw it. And that's what, in my opinion, certainly caused some uncertainty in the market. And uncertainty is always a killer of traditional markets, in my opinion. Whether or not decisive action was taken, that's fine. The market can work towards that. But they don't really know what's going to happen. People get unsettled. And that is still kind of the case. I don't think we've had a definitive, okay, call this one a draw from Israel or anything like that. And I've not really checked today on Twitter or any of the news outlets to see if that's the case. I've got to imagine Israel needs to write a strongly worded tweet, if nothing else. Can't just let those things happen. But we'll just have to wait and see. But it did lead to a lot of people, like these articles here, suggesting that invasions, outbreaks of war, conflicts, etc., cause negative impacts on markets. And yes, we have seen in the very immediate aftermath or during of that it was in fact the case, certainly with Bitcoin. So made me think over the weekend, well, is that actually the case? Can we actually go back through, have a look at conflicts and see whether or not invasions, drawn out conflicts, wars, whatever term you want to use for them, actually lead to downturns in the markets? And if so, can we then use that data to have a look? So I thought, right, nothing more morbid than just asking Wikipedia to list all the wars since, I was looking for 2009 onwards because obviously Bitcoin's only been around since then. The problem is, and I don't want to downgrade any conflict or war or anything around the world, but I'm looking for ones that the West are interested in. I think that's the best term to use. So this list is fairly extensive with warring nations, but when you look at sort of the supplementary parties, if you will, not that many that involve the likes of China, Russia, US, UK, Europe, all of that. And they're the ones that I was really looking for because typically they're the ones that move the markets. So, by 2009, the Iraq War, the invasion had already happened, and British point of view, really sort of tailing off there. In the United States for a few more years. Similarly with the Afghan war, the invasion had already taken place, and it was more of sort of an occupation, and that didn't. 2014. I'm trying to get my dates right here, but yeah, kind of felt like, so we had to scrub those two. So when I was looking through this, and I'm not going to bother taking you through it because, as I say, it's a depressing list of just all of them. There was only a few that really sort of met that criteria that I felt was pertinent, and also in the time which Bitcoin ran. So there's on the chart, and I've only found 4 really, and it is interesting. Look at that. So we go all the way back to 2014 and Russia's invasion of the Ukraine, first time when they were going after Crimea, which I think was successful from their point of view. But interestingly, it kicked off on February the 25th. Now, this is the weekly chart. Let's put it on the data. Excuse me a second. I now have to go. When we put it on the daily, look at that candle. That was the day it happened. So Bitcoin dropped initially, immediately bought back up. We had a week or two of rallying before the market corrected. Come back to what in a moment. I'm just trying to size for the point. The next one for me was back in, not really until 2022, and that was Russia's invasion of Ukraine part 2, if we will. And again, 24th of February, this, we're in a bit of a ranging pattern. It's this candle here, then sort of climb away, fell away. And then again, the only two that really spring to mind is the Israeli-Palestine conflict. I know many different, trust me, going for that list. The one that happened in October of 2023, again, on the day, this candle here. Oh, sorry, no, 23rd or 22nd. It's over here. It might be in this green candle there, 23rd. That's it. My arrow is just pointing based off the weekly. And then we had Iran. So they're the four, which isn't exactly the best. But interesting, all of them led to an initial spike, with the exception of the Israeli-Palestine October 23, which was coincided with the beginning of the bull run. And off we went up there. So not really too much data, unfortunately, to go with. And I was like, okay, well, there must be another way of looking at this. It's not just war events, it's news events, and how that impacts it. Because I've always believed, and I've always spoken about, I suppose, that during a bull market, negative sentiment just doesn't really affect the market. Positive sentiment massively does. And in a bear market, it's the opposite way around. Negative news seems to really impact the market, and positive move is just brushed under the carpet because we're in a bear market. And it was only through researching this that I actually came across a term which I'd never heard of before, called the wall of worry. This is an actual trading term, which I'm quite surprised about. And effectively, the wall of worry, I'll post the article, read it, talks about financial markets' periodic tendency to surmount a host of negative factors, and yet the price or the value of the market keeps ascending. The wall of worry is generally used in connection with the stock market, but the last few years it's certainly been used for crypto as well, referring to their resilience when running into temporary stumbling blocks. And the key takeaways, which I think is the only thing we need to focus here, you guys can have a read of it on your own, is climbing the wall of worry is a reference to investor behavior during bull markets or at the end of bear markets. And that is an important point that I'm going to go back to, and general periods of market gains. Okay, so this is the wall of worry is focused on negative news during positive market conditions. The phrase refers to markets' ability to show resilience in the face of economic or corporate news that might otherwise spark a sell-off, and instead keep pushing the securities because it's based on stock markets higher. The wall of worry is sometimes one event in the market must keep climbing in spite of, but is more often a confluence of events the market must look beyond. So then that got me going, okay, well, let's start Googling this. And there's loads of articles on it. I've just gone onto the images here because people have started to document key events. They're not just invasions. They're not just war. They're sort of geopolitical, or dare we even say the COVID incident features quite heavily on this. So I thought, right, well, let's just have a look at some of these. So here we go, the wall of worry, reasons to sell. So this is the S&P 500. It's the last 20 years. Goes back to 2024. So predates Bitcoin, but generally the sentiment is still there. So we got at the beginning, I'm not going to go through all this. So US invades Iraq. That was 2000. And we start to see the markets climb, even during Hurricane Katrina in 2006, 2005, markets climbed. Okay, yep. Then we had the global financial crash, which corrected everything. Bear market, bad news, Lehman Brothers, all that kind of stuff. It's moving it down. We get out of the bear market, back into the bull market, look to see what happens. The S&P downgrades the US debt, still climbs. Flash crashes, still climb. Fiscal cliff panic, government shutdowns, Zika, Ebola, Brexit. What's happening to the stock market though? It's going up. It's not actually being affected by all this potentially bad news, certainly. It depends on which. I again don't want to go political, so I don't really care about what your opinion is on Brexit. But it was very divisive, wasn't it? Then we get to COVID. Now, COVID caused the fastest bear market ever. And what's interesting, and it's not on here, this dip in March of 2022 is when the global shutdown happened, when everyone was locked up around the world. And what happened there? Markets flew. Granted, I appreciate money was like no, but get the point. We talk about Russia invading Ukraine again, and then we get banks. I thought that was 2023. Saying it's 2022. Obviously, we had the bear market, which crypto fell pretty hard for. Then we had Fed raising rates and debt crisis, and yet we're still going up and up and up. So you can kind of see that actually, if we are in a bull market, negative news and conflicts don't necessarily shift it. In fact, what it seems to do is to push it up. And it happens fairly quickly afterwards. This is the article or the screenshot I posted in Discord, which is what got me thinking about this. And this is taking in some of the wars over time, which again, I'll zoom in better. Just have to stay that side. That's it. So we've got Vietnam, Gulf War, Afghan, Iraq, Crimean crisis. That's the first Ukrainian invasion by Russia. And what it's showing you here is, look at the sort of grayed out area is when the invasion, the incident happened. And what it was sort of saying is, look, if you had bought during that period, even if it had downturned slightly over the next sort of 12 months, the market massively rallied. And the only time that didn't, the Afghan. And I don't really know an answer to that. We were coming off the back of the .com bubble burst that maybe had led to that falling. But the actual immediate invasion was a positive event, which lasted 6 to 9 months before the markets fell away. The Iraq in 2003, we saw that rally through. Again, the Crimean. So, okay, 4 out of 5 occasions here, actually war has led to a positive impact on the stock market over greater than a 1 year period. And even in the one time that didn't happen, still 9 months of a positive outcome to go. So going back to that first question of, does war really, or is war really going to scupper Bitcoin? Because what we're interested in, certainly on the evidence that we're seeing, that's not necessarily the case. And then just this final one here, which is kind of the same picture, just to see how things 10 years after. Again, it is the stock market. I can get that. But let's face it, the stock market does well. Crypto's going to do well. So this goes all the way back to sort of major World War II, first one there. Even after 10 years after World War II, we saw 108% growth. Bay of Pigs invasion, sort of in the early 60s, about 110%. Then we start to see the Iraq War 10 years later, so 2013, only 120%, which doesn't sound that great actually. But you've got to remember the middle part of that was a great, the great financial crash, 2007 and 8. So that hampered a lot of things. Vietnam saw 180, Korean War 370, and then the Gulf War 460 plus. So again, kind of seems to suggest that not just from a very immediate aftermath, even 10 years on. So we've done immediate aftermath, we've done 12 months. Now 10 years on, typically actually stocks continue to perform. Now you could argue that generally most wars don't last for 10 years. It's only really the Afghan war, don't know how long it's for, Vietnam as well, that really went on for greater than 10 years. But I think it's just interesting to see that actually, despite any concerns of people posting World War III and nuclear Armageddon and all this kind of stuff, settling for a little bit, 24, 46 week, whatever, until we really understand what the scale of the upset and unrest is. Once we know which direction it's going, and it doesn't necessarily matter if it is down to bloodshed and war, we know which way we're going, markets can recover. And not to put too fine a point on it, but typically war is the turning on of the money machine, and it's just for investors, smart investors, it's shifting their portfolios into things that have advantage. And again, we don't really necessarily waste any time going through those. I'm sure your imagination will take you that way. So yeah, I whilst it has been unsettling the price of Bitcoin for the last couple of days, 67,000 down to 61 bit as a day. I don't necessarily think that the war is what's now going to turn whatever this downturn into and whatever caused it. It's a convenient thing that has happened at a similar time, but as we're now going to go and have a look at explore, there may be other factors. And yes, that initial reaction on a Saturday evening UK time, when no other markets are around, and crypto is the only thing that people can sort of like react towards, then yeah, we're going to see it. But the Sunday you saw strong sell, and we had been selling for a few days beforehand, bought back. Markets open Monday, and traditional markets have their say in them. Okay. I have seen your cows and towel charts. Yep, I will get to Bitcoin now. So let's actually have a look at the Bitcoin chart and just sort of see, well, where are we? Why has this happened? What can we do about it now? So this is these greyed and yellow boxes are liquidation areas that we've taken from liquidation heat maps. The yellow line down the vertical yellow line is the halving, which we think it's going to be at late on the 19th, early on the 20th. 19th now. Blue line represents the 50 EMA, and then the white line that's sort of moving diagonally across is just a strong trend line that I've been monitoring for the best part of 18 months. As you can see down there, it's had some good reactions. So, what do we see right now? Well, actually, this recent move down, part of potentially a topping pattern, triple top, whatever you want to call it, or it could just be a bullish rectangle, actually took out long liquidations at around about 62,000. Now that build up of long liquidations actually appeared relatively quickly. It's only been over the last sort of like 2 or 3 weeks, whereas these other ones, months. So this ties in very much with the market, as greedy as it is, and we'll have a look at the greed index in a moment. Suddenly investors coming in, seeing probably news about the halving, the ETFs, everything else, and actually getting even more degen. So the fact that this built up so close to price must have mean some very high leverage, and it came so quickly because just utilizing the fear of missing out and jumping on the bandwagon of the fear and greed, or the greed index should probably now be called, because we never seem to see fear anymore. But actually, what we have seen, even before Iran's surprise attack, is a rejection around about 72 beginning of last week, and a steady fall away. But the most important bit that they did take to close below the 50 EMA. Why is that important? Because we haven't seen the price of Bitcoin touch the 50 EMA since the beginning of the year. So we're talking, best part of 100 days of it moving away the EMA. And we always, on the daily, go by the fact that price will reconnect with the 50. Now, it can do it with a sharp retrace into it, or what we've seen here is actually Bitcoin's been ranging for 2 months, allowing the 50 EMA to come and catch with it. But it has caught up with it. It has now closed below it. So that's quite important that it's closed below it. We now need to try and evaluate what it's going to do now that. Let's have a look at the last time that happened. Last time that happened, we went from October to January. What happened? We shot away from it. I'll just hide all for a second. Oh, I'm going to draw on it. I just have to do it with my cursor. So 16th of October, shot away from the 50 EMA, rallied all the way up from 26,000 to 44,000. Then what do? Ranged in some sort of pattern till the 50 EMA finally caught up with us, hit it, reacted off it a little bit. We lost its support. We actually went below it. I'm sure if we went on lower time frames, we'll see some other EMAs which we interacted with. Just staying on the daily, reacted within it. Everyone got fearful. Everyone was talking about, we've lost 40K. We're going to go down to 30 and beyond. Lo and behold, it had its time down there, resetting a lot of indicators. And then we shot straight through it. We recharged our batteries with this ranging session. We touched the support of the 50 EMA, and then we burst through it and we never looked back. Exactly what's happening at the moment. We shot all the way through it, not touched it for nearly 100 days. Then been in the ranging pattern. Talked about all-time high. Been in the ranging pattern here. 50 EMA has finally caught up with it. We flirted in and around with it. How far we lose it, turn around, is something that we need to explore by looking at other indicators and other time frames. But the pattern is very similar. Going back and having a look at sort of even here, beginning of the summer last year, shot through the 50 EMA. Okay, we were only away for a month or two. Ranged into it. We didn't snap back down. We ranged into it, lost it, recharged our batteries, and shot back up. And this is, again, in January, shot away from it, ranged, caught up with it, lost it, shot away from it, ranged, lost it, shot up away from it. And in a bear market, it's the exact opposite. We lose it under it, and we range and we catch it back up. And so nothing really has happened at the moment to suggest that we're out of a bull market. We just have reconnected with an EMA, reconnected with an indicator, which we haven't seen for a long time. And the market is just repeated. It's ranged to it. It's building this level as an ideal level for support, allowing indicators to finally reset. And now if other favors and other circumstances deem it so, we'll then be in a much better, stronger position to see that next huge lift up afterwards. Again, to investigate as to how long that may be. Just put these on. Onto the chart in a moment, just to have a look at other levels. But what I would say is when we broke through this level on the 9th of February and we shot so far, and it's this white trend line that had worked so well for us. For anyone that's new, starting right back to the beginning of 2023, and it just perfectly where we had action all the time. But this one, I mean, that day it just shot straight through it. I was selling my Bitcoin around here because I thought we're going to react here, and off we went and never really looked back. And I kind of thought we'll never see this line again. But you know what? It's creeping up. This line's at today's price, 55,500. Too far away at the moment. You give it another week or so, you're looking at the high 50s, close to 60,000, kind of where price is. And be interesting to see by the time we do this at the beginning of May, whether or not that price is around that and how it reacts off it. With the exception of this one time, typically it's normally hit this line and sort of reacted, whether that be support resistance, depending on which side of currently sat or hitting it. So yeah, that's definitely something I'll be keeping an eye on. Now, the reason I go to the questions, there's only one question this week. Someone asked me to explain heat maps were, given that we use them in this chart here. Seems like an ideal opportunity to do that. So I'll give a very quick 30-second explanation. So this is the heat map that I use. It's high block. There are other ones available. One of the parts of the question in there was, are there any sites that do it? So you can go into CoinGlass, which is free. Scroll along, just hit liquidation heat maps. I use the model 1, model 2, same data, just looks different. So what do the heat maps show us, and how can we use that? So very simply put, all the heat map is indicating is price action, which is made up of the green and red bars, and then areas of liquidation. Okay, so it's taken it from perp trading platforms, and it's looking where people have either long or shorted the market, depending on where where the buildup of color is. And every time you do enter a long or short into the market, you will have a liquidation point. You might have a stop loss set somewhere else. This doesn't care about stop losses. This is solely looking at liquidation, because that helps to paint a picture. And depending on where price is and where the major buildup of levels are, we can kind of see what the majority of people are doing. Taking it a bit further, and this coloring is actually the same as the coloring on CoinGlass, so that kind of helps. But we're looking for areas of brightness. So if you see purple, that's low down, so you kind of see it in the bottom left. Purple means there's no activity. And then as it gets brighter and brighter and brighter, we're getting more condensed information in and around that area. Now, depending on the scale you're using, will ultimately change price. But the absolute brightest, the heaviest levels, most populated levels, where we're going from very, very bright green into that yellow. And if you see a yellow or green area above current price action, that is where the short liquidations are. Okay, so that's people who have shorted the price, and they would get liquidated if the price increased up to whatever that level of brightness is. If you're looking at an area of brightness that is below price action, that is where the long liquidations are. They have gone long. If the price was to fall, they would be liquidated. Now to the crux of why it's important. Well, if you're someone like me that follows that market maker theory, or you are someone that particularly likes to trade, you can utilize data like this one of two ways. Firstly, for your own trading. So when you're placing a trade, can look at a chart like this, and if you see that your liquidation level is in an area of extreme brightness, you can know that that's where the vast majority of the people are targeting. That's not always a good place to be in trading, because that is typically where retail go. Retail think like a herd. They are easily picked off by the gazelles that are professional traders. So you can use that and go, well, wait a second, my liquidation level's falling smack bang where everybody else's is. Maybe I should look to try and change how my entry position is set up. Try and get in an area that isn't so heavily populated, and preferably the other side of it, so that you're away from it. And the reason you say preferably the other side of it rather than closer to price action is because market makers, institutional investors, however you want to do it, they can utilize this data to understand where the vast majority of spare liquidity is. Because effectively, these liquidation points where money's going to be given back to the market, retail are going to get wrecked. And so they can then utilize that information to push price, because remember, these are market makers, in a direction that is easily attainable. And again, just use this one as the example. Go over to the far right hand side. What we can see at the moment, just below price, in and around 57,000, there's starting to be a buildup of yellowing. Okay, these are long liquidation points, and yep, okay, some of them are fairly recently placed. If you look at the tail, a lot of these have been in position for a couple of weeks now, and so they can think, right, well, price is relatively close to that. There's quite a bit of purple in between it, so it wouldn't be that hard for us to move price down, take out these liquidation levels, build up our longs on the way of driving the price down, date these people. Whereas at the moment, looking north, at around about 73, whilst it's still completely possible for market to move it there, it is further to go. So it's going to take more effort, cash, I suppose, investment, whatever term you want to use, to get it to that level. So market makers can use that as where the easy pickings are. And we can kind of see that. I mean, look, when you look at these, they seem to just take out the levels. And look, on this example here, every time I put my cursor over, I obviously get boxes. But in this area in and around here, you kind of see that it took out a decent chunk of brightness here. And yeah, there was a bit more green up here, obviously, but it was lighter green at the time. It's got brighter and brighter as time's gone on. But at the time, that was probably the brightest bit there, because that's what. And then they moved the price away quite quickly. And then the next thing they kind of targeted is down here. And they totally cleared that up. Now, they actually got a little bit excited. That's that major level. Now, I'm on the 3-month time frame, so I'm collecting a lot of data. Whereas if you look at 7-day or something else, it might be a slightly different picture. Kind of see, cleared it out, they've reset it. Kind of position themselves to take it either way. With such a short-term bearish sentiment at the moment, actually the direction of max pain would be to move the price back up. I don't want to get into market maker theory about what's actually happening when price is dropping. Market makers aren't selling. They're buying at that stage. They're buying as the price is going down. If you look at things like book maps, if you look at Trader Light or whatever, you see the order books. Actually, there's a lot of buys still to be, being placed. Buy orders down here. Market makers are looking to get filled as the price goes down. They're not scared. They're happy to buy. Whereas there's not many sells at the price movement. So again, something else that you can kind of use to determine the direction of trading. So I kind of hope that helps, answers your question. Longer. CoinGlass is the free one. Kingfish is another one. I don't really use either, so any nuances I'll be able to help you with. One thing I like about Hyblock, and it is expensive though, is you can collate data from BitMEX, Binance, and Bybit, where it appears on CoinGlass. I have to take each exchange, so it shouldn't have too much of an impact. I like to think that generally trades are spread across. So that's where that currently sits. I want to kind of have a look at Bitcoin price now, levels we could go to, what could actually happen rather than anything else. And I'm actually surprised it's an Avenger call. Some sudden price, which is really scary, because normally I don't bother looking at price because I just think, well, what's the point? Change what's on the call. But before we actually have a look at the price action bars, let's just draw our attention down to RSI, because it's actually quite interesting. We haven't looked at the RSI. As a matter of fact, the last time we did look at it, we were in the high 80s. And actually, in this period of ranging, we've managed to cool off significantly. So RSI, okay, relative strength index, you get above 70, overbought. Okay, get below 30, oversold. We were overbought, and this is on the daily, for a significant amount of time. But being able to range between 72, 60, 70, 60, 70, etc., we've actually been able to knock off from 86 all the way down to currently sitting around about 1. That doesn't mean we're going to turn around now, but from an overbought nature, we're actually closer to oversold daily time frame, and we have cooled off. If you're going to have a look at things like the fear and greed, you'll see that we also managed to start cooling off. And that's the point, is that's why we relish fire backs, because you can't fly too close to the sun, otherwise we will melt away. We need time to cool off, reset, and go again. And as long as we don't break major support, as long as we don't break major indicators whilst in those periods of cooling off, then that's only going to benefit. Because yep, we're going to reset some of these indicators. We talked about SI. Also, we're building stability, structure in the price, and you can't argue staying at 60 to 70,000 for 2 months, not building structure, which I dare say sometime in a couple of years' time we will probably revisit. Staying here for this long, I'm sure at some stage we'll probably revisit in a bear market and see what happens. Don't hold me to that in 2 years' time if we never come back here. The sound is pretty flaky. Do you need to switch it on and off like last time? Is it ever? Okay, hopefully that has helped reset the sound for you. And yeah, we'll go from there. So, right, okay, RSI done. Let's just put that one to bed for the moment. Let's actually have a look at this price action. And on the 1 day time frame, we're at the very bottom of the range. And let's face it, it's not a particularly, okay, good, it sounds better. It's not a particularly enjoyable place to be. But we have actually reacted quite well off it for now. The last 3 of the last 4 days, we have come down to the range that I've just emphasized within the rectangle. And it does feel unnerving when you're at the bottom of a range, but there is still an opportunity now for a bounce. And if there were a bounce, this is the level you kind of be looking at. I know we've been higher than it, all-time high, and before this area that I've just indicated here has seen action on over 10 occasions. So it seems like a logical place for us to react within. And again, that's building that range. We've spoken for weeks about how we'd like to see us range for the next few months while we cool things off between 70 and 60,000. It's unnerving when it happens because altcoins have really struggled during that period. Bitcoin dominance has actually managed to climb. But right now, that's where we're at. However, the big however here is this bottom level. That's our focus right now, isn't it? Hey, we shoot up to 70,000, great. Everyone's rosy again. Altcoins will react in a similar, if not the same way. We start to attack 60, 61, 62,000 level, and we're starting to consistently be closing bodies rather than wicks within this, and we may be at a point where we're actually going to lose this support. And if we do have to consider, just from a price action point of view, where is the next real set of price action? And unfortunately for us, it's down here. Okay, that's it, isn't it? 50 to 52,000. Go back to have a look now at some of these levels that we were talking about from a liquidation point of view. And actually, that 52 to 50,000 is this blank spot here, because everyone's placed their longs and their shorts either side of that. So we'd have to go through and clear all potential to come in. Going back to just looking at price action, find the right one. So what else do I like to use to try and give me some indication where price is going? It's the Fibonacci level. So now So, not actually telling us as nice a picture as I would like. I was hoping that 618 would line up with it, but it's relatively close. 618 is perfectly 1,000. And the 382 and the 5, well, given on recent price action and not really telling us too much of a story, I wonder weekly a little bit back. No, not much. That daily. So, again, kind of paints a bit, not much holding. Real area that I'd be looking to attack, should we lose it, is actually going to be in and around that 50, or low 50, 52 to 50, 500 kind of level. Had that step kind of change there. Maybe we spike down to 618, golden figure after all. Def does not, Games Lab. People are having issues with my sound today, or should I say I'm having issues with it. Okay, hopefully that's better. Apologies if you are struggling with it. I'm not sure as to why. Everything's moving in the right direction for me. Annoyingly, it seems I have a ghost or a gremlin in my mixer, because this has been something that's plagued me for months. But please do let me know. Okay. So we're having a look at that. But the other thing that we didn't take into consideration, which I drew last time, so I'm going to try and freehand here, was this line. Okay, that was the other line. Remember, we're on the daily at the moment, and this has held us as support in the past. So I think it deserves our respect in a sense because of how much it's had, and potentially then we may have some sort of interaction with the 382 around about 57,000. And it's what it does there. If it does what it did when it burst through here and it didn't look at it twice, then okay, we're gonna have to really pay attention to this. Not sure what I did. I did the old classic on and off. But if we only get if we do interact here and we start to scroll along this, then that is tying in with the 382. So they're definitely levels that I am looking at. It's why I never really update this chart to once a month, and I can just keep monitoring it. But that is what I would be looking for. Now, if we try and drop it down onto some other time frames, let me just I'll tell you what, no, I won't do that. I'll do it this way. Just delete all of those. We'll drop this down to the 12. To do. There we go. That's what I was looking for. Drop that onto the 12. So we've got the 200 again around the 58.7, which also tied in with that other level. So I think that's probably what, if we can't hold this 61, 60,000, whatever you want to call it, yeah, I've got to look at maybe 58. And if we lose 58, then I may have to consider what I want to do with the Bitcoin I've held and whether there's a risk to reward ratio of waiting for it. Because there doesn't seem to be much after that that's going to stop it. Yeah, there's some vector candles that would need to be recovered, but that doesn't necessarily mean it's going to automatically turn around. Although the 50% of that vector candle is right at the top of this price action. So maybe we do see the upper limit of the price. Anyway, we will have a look at that as and when it goes through. I'm not sure what I was doing now. I think this one here I was just trying to emphasize. So here we got the S&P, we got the NASDAQ, we got the US dollar, and we've got Bitcoin. I think what I was just trying to emphasize here is, it's on the daily and we've zoomed out, but you can actually see meteoric runs on the S&P 500, the NASDAQ, and Bitcoin. They've had even longer away from the 50 EMA on those two, but we have now started to attack them. We've lost them as support. Has been turning around. This is not just a crypto related issue. This is actually a wider traditional markets, and ultimately Bitcoin is a speculative asset, much like the stock markets are. And so, we're seeing a downturn, and the opposite of that, the dollar's absolutely rallying, which typically means that speculative assets don't do as well. And that is what we're seeing now. Obviously, it's a case of, well, where does this turn around? Well, the dollar is about to run into some interesting resistance in and around 107. We've had rejection from that in the past, which may be what dictates a turnaround. Sadly for the S&P and the NASDAQ. The rallies have been so strong that we're looking at sort of 4,800 and the equivalent of about 17,000 for the NASDAQ. So that would mean still a considerable amount of falling would need to happen for those to turn around. We'll just monitor those. We'll just sort of see where they are and how that is. But ultimately, I know some people talk about the disconnect and Bitcoin doing better. When you look at the charts like this, Bitcoin hasn't really done better than the traditional markets. They've all been moving in a northerly direction. For a disconnect to happen, I'd want to be seeing these going down and this going up. That doesn't seem to be the case. We're not talked about gold, but gold has also recently had an all-time high, and it wicked up to it. It's come back down, but it seems to be looking, again, pretty strong at the moment. We're getting into the others. We are starting to see fear and greed coming down. It wasn't that long ago that we were 88, 92 on the fear and greed index. According to Alternative Me, we're at 65 at the moment. You go on to Coinmarketcap, and we're actually down at 60. We are starting to see that cool off, which again goes back to the fact that that's what we want to see. We want to see that cooling down, reset, and away we go. Sorry, I got an itch on my face. And interestingly, when you look at the traditional markets, they're actually already in fear. So, you know, a month ago, they were at 74, just outside of extreme greed, but this has really shaken them to be dropping down to 39. So maybe crypto's got a bit further to go, or we're just more hardened to it. So it doesn't shake us as much as traditional investors. We'll never know, but it's something that we will have a look at as it's going forward. This is interesting. Alt season is gone. We are now in Bitcoin season. Okay, and that is interesting. Dominance has taken out. Altcoins have taken a much harder fall. But where we were in January, and I suppose at some extent in March, we've now lost that. We've retested 25, confirmed we're back in Bitcoin season. Yes, we have had a little bit of a bounce over the last couple of days, but we're still actually in that Bitcoin season, which has made me have a look at how my portfolio is currently balanced at the moment. And we'll go through some of those thought processes in a moment. But alt season for now is on a little hiatus, and it had 3 or 4 month mini alt season for us to take advantage of. But what is interesting is when we go back to the fear and greed index, is just how long we have been in greed. Greed is marked as anything above 50, so we've been in greed for the last 6 months, just over. But we haven't seen extreme fear, which is marked 2025, since the beginning of January 2023. We were 29 there. I can't even get one. 26. So maybe we were in this block sort of November, December 22. Well, what happened around there? How's FTX's crash? So that's how long it's been since we've been in extreme fear. Why am I talking about extreme fear? We're not in a bear market. It doesn't matter. We're in the bull market. Greed is kind of good, as Gordon Gekko would say. But actually, if you look at previous data, 2020, start of the bull market. Yes, COVID drove us down to it. But we were in extreme. We had the resets. 2019, coming out of the bear market of 2018 and resetting ourselves. We had plenty of opportunities or occasions where we dropped into extreme fear, resetting that for us. Even actually in between 2021, April 21 and November 21, with a summer correction from the two highs in the half, 64,000, etc. We went all the way down to 10. We had that correction. We were able to operate down here and reset everything. We've not had that yet, okay? And so this pullback feels bad. And I asked in the poll, where are people? Are they thinking about selling? Are they thinking about hodling or whatever? Because I am seeing sentiment, people reaching out to me concerned. And although we haven't dropped into fear yet, that pullback into just light greed is concerning people, because for the 6 months, especially with that alt season, we've seen our portfolios go up, triple figures percentage-wise for most of us. And yet now we've had a 15, 16% pullback in Bitcoin, unfortunately for altcoins, in some cases a lot higher. And it is a very painful thing to look at. But it doesn't mean that the bull market is over. It doesn't mean that the reason that you went behind a very, not successful, because that success will be determined in the next 12 months' time, but a promising project, cryptocurrency, whatever it is, doesn't mean that all of those fundamentals have been undone, because we're starting to see a correction. Okay, so it is now about, you know, trimming your portfolio if there were things that you wanted to move into, utilizing any spare capital that you have and you are willing to put into to buy a dip, of course. But it doesn't mean that you abandon everything. Nothing's fundamentally changed over the past 4 weeks when we were back at, you know, all-time high 72,000, 73,000, whatever. Yes, the price has changed, but the fundamentals behind either Bitcoin, the halving, ETFs, we've not even talked about the fact that Hong Kong approved ETFs, or China really approved ETFs for both spot Bitcoin and Ethereum. They're not traded yet, but they've been approved. You know, that kind of thing, the halving, the supply squeeze, everything else that's coming into you know, fruition for Bitcoin and then ultimately for cryptocurrencies, that's still there. Now, of course, maybe the bull market is over. Maybe none of us are seeing it, the wood through the trees, and we'll have to wait, you know, because it would massively upset the 4-year cycle. It massively upset our mental models and everything else. We will never pick up on when the bull market is over immediately. But that's why we meet a couple of times a week and we talk about price action, just so we can kind of see whether or not anything has fundamentally shifted. But right now, that isn't the case. You know, a pullback here of, let me just clear these so we can see it. Sorry, that. Yeah, pullback here of, okay, let's take it from wick to wick, 16%. It's nothing. It is nothing. Just go back and have a look. Just put it on the weekly. We do this every week to try and, you know, put people's minds at ease. These were 20% pullbacks, 20% pullbacks, you know? I think that was a 20% pullback. It didn't seem as bad because 16% from 74,000 down to 60 sounds a lot worse than 6,000 down to 4,000, doesn't it? But as price gets higher, the dollar value of pullbacks is going to increase, but the percentage will still be there. We have a look on this bull run, you know, pullback. Sorry if I'm teaching everyone to suck eggs here, but pullback. Even I suppose to some extent, where's the height on this one? I suppose it's that one to that one. Pullback 16%. It's a massive dip there. They happen. They happen. It isn't anything necessarily to worry about. If you still believe in the 4-year cycle, if you still believe the halving as a catalyst towards further prices, this isn't anything to be worried about. And let's not forget, we're going into a halving. What would make market makers into an even better position is to freak everybody out before the supply of Bitcoin's about to halve. You sell your bags into them. And so I'm not worried. I've not sold any of my Bitcoin, and I've actually ended up buying more because that's where we seem to be more favorable at the moment in terms of Bitcoins versus altcoins. And so this time last week, this is what my portfolio looked like. Tau was creeping up, Near and Dot were making up 50%, and sort of everything else was in between, and business is still the business side of things. How things look as of today, it's just a lot cleaner. I mean, a Tau last week was about 39%, but it has fallen hard, so it has fallen. But Tau is now my biggest asset that I held. Dot and Near are still there, and I've got rid of some. I've got rid of ones that I actually really like, but at the moment, I don't feel being in them is advantageous. And we'll have a look from altcoins a little bit later on. But the risk to reward is better for me to step out, either move into BTC, so I have increased my BTC position, or just hold some off with some buys, thinking that some of those may go lower. So the likes of Pith and Fetch, I will be rebuying those. I just don't own them at the moment. I managed to sell 50% of my Glimmer bag last week, which is why that one's so significantly reduced. I won't be rebuying that. That's gone into BTC and Tau, and that's kind of where the balance sits at the moment. So I am down to 4, 5, 6, 7, 8 tokens. I don't count USDT as one. And if we actually now have a look at where things are going, let's start with good old Tau, shall we? Makes up the majority of my portfolio, and again, you know, it actually take away what's happened over the last couple of days. You know, 1, 2, that spike up there, kind of a triple top, and it is fighting the range at the moment. That's very much like Bitcoin. Tau fell harder because we had the Binance pump. So that feels, you know, that's not a 16% drop. If I can find it. That's from this peak here down to this here is a 46% drop, you know? That's devastating. But we had that crazy day. If we take that day away from it, and we're down here, it's a 30% drop. Okay, and then if we actually correct it to where we sit now, it's a 23% drop. So Tower's definitely struggled last couple of days more than other altcoins have. But again, look where we are. We're fighting support. Okay, and we throw a fib up. I mean, look at that. I'll tidy this up. I'll just delete it and start again. And I'll zoom in. But you throw that fib up from here up to there. I'll zoom in now. You know, down to the 0.5, bounced off that. It's come back now, rejected off the 236, and it's down at the 382, and we've had some sort of bounce off that. I throw on the 50 EMA just for S and giggles. Oops, that's not what I meant to press. And that's where we're currently sitting. I mentioned this in Discord before a couple of hours ago when James was asking my thoughts on it. Tau was actually right on 460 at the time. And I was like, for me, I'm not doing anything with it because it's on a 382 and it might bounce. But if it kind of flies up to here, rejects, and then comes back down, doesn't close above the 50 EMA, and we continue to see a little bit of weakness, then maybe there might be an opportunity to take advantage of that. Because I would say the next logical target would be a retest of 460. Well, 560 down to 460 is a lot more appealing than getting out at 461 when 460 is a turnaround spot. But if we do, you know, if we draw what we had on before with BTC and we have a look, oh, why can't I find it? Rectangles. You know, we have a look at this price action here. Fine. I mean, you could draw a much bigger box, couldn't you? So it takes into that week. So let's just have it at the bottom. This price action, you know, we lose 400, I suppose, and then I think, you know, 350, that's 618, a retest of that price action there. That seems where it goes. Is that my doomsday worst case scenario? No, unfortunately not, because it's all dictated on Bitcoin. But they'd be the levels that I'm looking at. I haven't sold any of my Tau. It's still tucked up, just staking away. And at the moment, I don't really feel the need to do it. I don't feel the need to do it for two reasons, though. Because, okay, I missed the Binance move. I could beat myself up about that if I wanted to. But I didn't miss the head and shoulder move that we talked about for so long. You know, and I can't win them all. I don't remember where the head and shoulder was. It was like that, wasn't it? It came down. And I sold at 580 and I bought in at 478, I think it was. So I had a decent move there. Okay. And I suppose it's about not being greedy. I've already benefited from increasing my position, from taking the risk of it on one time. To take the risk when Bitcoin is hovering around 460, you know, within the last week and a half, it has bounced off that 460, 470 level 4 times. So to sell it now, it just doesn't feel like that is the best risk to rewards, particularly if I'm talking about getting it at 460 and the best chance I have is around about 400, 410. You know, I'm talking about 10% uplift. But the risk of it moving the other way is not there. Whereas if I did wait to we see if it retests the 50 EMA and closes below that, rejects off that, that suddenly is a better risk to reward, because we're talking about 25%, maybe more uplift depending on where it ends up going. So that's how I sort of evaluate that kind of level of risk. So yeah, I was sat there watching Binance go up to 770, but you know, it didn't feel like that necessarily needed to be traded. At the time, it was a typical Binance listing, pump on the news and then dump, and it's unfortunately just continued to dump with the rest of the market. Someone asked me to have a look at CAS, so let's just pick that one up first. I don't even have a CAS chart. That's how bad it is. Not the asset, just never really look at it. So from a CAS point of view, you know, again, what am I immediately seeing? You know, without putting a fib or anything else, this is my base, what I'd be looking at right now. So we're below the 50 EMA. We had the move up to it and a sharp rejection from it. We're starting to close a little bit lower. What I would say is this is kind of a messy range that it stayed in for a good 4 weeks. So we could find support. It's come down and hit 10.5 cents and bounced up, and it's hit 11 cents twice and bounced up recently. Because there's plenty there, but ultimately I do see, unless we see a sharp reversal on everything else, I do see it coming down and really testing actually 10 cents flat. And I'll draw a fib on in a moment, but if that was to go, that would be my last line of support. And if it lost that one, unfortunately, I really don't see it getting down there unless something really bad happens, as we are talking low 50Ks. That's it from a price action. We'll throw a fib on now. Let's have a look. Is that the right way to draw that? I should really be doing it there. Maybe that's better. I might have cheated, some of you might say. But we can kind of see it ties in a little bit better with where price currently sits. So yeah, that's what I'd be looking at. So yeah, it still has a 382 at the moment, holding it off, and we've rejected off that nearly 3-4 times in the last 4 days. So 11 still holding strong, but then if it loses those, they're where I'm targeting in terms of those levels. Hope that one helps. As I mentioned with DOT, so DOT was looking pretty nice and pretty, and then a few days ago we lost that level at 9. It came back to attack the 50 EMA, and then it fell away. And even if I wanted to sell DOT, I have unstaked 50% of it, but it didn't clear till tomorrow. And so we've lost that. There's nothing I could have done with it anyway. And where are we sitting now? We're sitting smack bang on that from a local point of view. If we take it all the way across, you can definitely see a bit of price action. It's on a decent area at the moment, but it isn't particularly filling me with confidence. This doesn't look like a particularly strong chart right now, because we talk about dead cat bounces. Bounce, come back through, lost it. And yeah, we've had a little bit of recovery, but still some selling pressure there right now. So DOT's in a bit of a precarious place. Again, drawing those lines, those areas, I'd be sort of looking somewhere around there. But if I were being brutally honest, I'd probably take the bottom part of it, just to be safe. And then by then, yeah. Or did I not draw? You're doing that, but look at that fib. 618 perfectly hit. Bounced all the way back from 382, came back up to 382. It's now hitting the 0.5, That's why I like fibs, and I always will. And I appreciate some people don't want to have too many indicators on the charts, and that's absolutely fine. But for me, with exit strategies and everything else, I use fibs and use previous price action. And with the near ones, that worked really well. Well, it worked well in getting me back out and then getting me back in, but of course, price has fallen away since then. And this is kind of where near sits at the moment. So what am I looking at here? Just wondering. Okay, we're from a trend line over the last 6 months, we're right on it. The AI narrative and NVIDIA narrative is all kind of cooled off a little bit. We had this rise up with the conference and everything else, and we got very excited about this climb up. But ultimately, that's started to see a pullback. Again, that's what you want. This one doesn't look as bad, to be honest with you. I mean, I know it's had a sharp drop off like DOT, but it's still got this support here. It's much closer to the EMA, and it doesn't feel like it's falling away. But unfortunately, we are on the cusp of it needing to make a decision here. And I suppose there's sort of that level there pretty close. But after that, I'd be looking down here like that. And then let's throw a fib on. There's a 618, that level, probably ideal. Maybe I could have drawn one there. But yeah, so that's kind of where I'm seeing. I'd hope it doesn't get down to 2.278. One of the questions that I suppose people might wonder is why didn't I sell everything and move it all into BTC? But for me, I pretty much sold everything that I've got into recently because the entry position just wasn't really worth it. Whereas Polkadot, Near, Rose, Render, I've got into them in Bitcoin. Fantastic position. My average Bitcoin buy at the moment, I think, still currently sits at about 24,000. Polkadot is less than $3.8 dollars. Near, it's round about just over $1, $1.12, I think. Rose was 3 cents. Render was $1.38. So, you know, the time, because I was buying those in 2022 and through 2023, that time in the market has afforded me a much better entry. And so to fully get out now, it doesn't really make much sense. Whereas I can just ride this pullback however it's going to be. They're all strong projects. And, you know, hopefully they're going to see some recovery when the whole market turns around. Whereas things like PIF and Fetch, you know, buying those only 4 or 5 weeks ago, it's meant that actually I've already lost my entry position. And looking against some of those against sort of BTC pairings, actually if BTC dominance is going up and we've got the halving happening in a matter of days, I might be able to move that at a loss from a USD point of view into BTC, wait to see how BTC reacts. And then when BTC makes that shift from being dominant to less strong, we go more into an alt season and we start to see this climb back up this chart, then flip it over back into Fetch and PIF. Maybe not Flux, we'll have to wait and see about that one. Entangled, I do like, it's very new and it's bled hard. And I really need to just sort of look at the vesting unlocks, because I think there's one due in a couple of months. So maybe I have to hold off on that one. But it feels comfortable at the moment to have those in BTC and have a little bit left in USD just to make a move and see what happens. I'm kind of just thinking, have I kind of got to everything I really want to talk about? And maybe we're just knocking on the head a little bit earlier. I don't know if anyone's got any questions or any comments. Let's just have a look at the poll whilst we are here. So 12% of you are very honest and said you'll just follow the crowd, which, hey, sometimes that helps, you know. RT and our Discord can be a hell of an echo chamber at times. So yeah. Some of you are considering selling, but 75% of you are diamond hands. I respect it. I have sold some. I sold some last week. I sold some a couple of days ago. I sold some today. But I hope you can understand the reasoning behind me selling, why I haven't sold the stronger, better entry assets. And I'm not sitting on my hands with it. I'm, you know, buying BTC at a value I think is good, particularly where I believe Bitcoin's going to go in 3-6 months' time. And then I'll just switch that one over. But there's absolutely, let me just end the poll. Thank you, everyone who contributed towards that. But if you are considering selling, whichever asset is you're considering, just think about the risk to reward. So even if you don't like how I have a look at things with fibs and previous price actions, absolutely fine. But just think, where am I selling? Are we at an overextended red candle? Is it due a pullback? Have a look at other indicators like the RSI. I mean, I bet if we have a look at Tau, let's go to this. Let's put Tau on. Let's drop it onto the 4 hour and let's throw an RSI on. Do I have an RSI? No. Let's throw an RSI on. Yeah, Tau. Each of these bounces. In this last one, yeah? So it's down at oversold, okay, 30. And then we went from 400 to 600. The size of the bounce isn't relative to the size of the price movement. So, but again, we've come down to that level. We are oversold again on the 4 hour. Is there a possibility of a bounce, even if it's only up to the 50 EMA again, which is now down at 550? So having a look at those things before then going, yep, now is a safer place to sidestep, because you sell here when we're already oversold. Yes, it can continue to go down. There's a good chance it doesn't. In fact, most of the times we get down here on the 4 hour, we see a movement up in price. That's why some of these indicators are quite useful. So absolutely, for anyone that is considering selling, you know, I don't necessarily disagree with your thought process that selling might be a good idea, sidestepping, however you want to call it. But just think about how you want to time that and balancing your risk. Maybe you don't sell 100% of it in case you're wrong. Maybe you only sell a portion. Anyway, I think that's kind of it from me. Unless anyone's got anything else they would like to add. Why have I got this here? The halving. Here we go. So 3 days, 5 hours, and 40 minutes. It's a shame because only 90 minutes ago, that's not true. Only 2.5 hours ago, we were just under 500. We just ticked over onto 500 blocks till the halving. We now have 486 blocks until the event, which is not, look at that jump. It's gone from 2 o'clock on Saturday morning to 7 o'clock on Friday night. Either way, I'm going to be in Prague. And I'm going to try and get everybody I'm out with to raise a beer at the halving and have a drink to it. To Bitcoin's halving birthday, I suppose, whatever you want to call it. But yeah, I got it wrong last week. I don't think there is a trading pub this Thursday. Someone will correct me if I'm wrong, but I'm pretty certain there isn't one. Next Thursday, I don't think there is one either. However, I'll probably just send out a little message on Discord, see if there's any interest in just having maybe just a voice channel open in Discord where people can either ask me a very direct question, maybe personal to themselves and their circumstances, or what would be even better is other people just contributing their thoughts and processes, because I do feel sometimes it's potentially a little bit one way from my end, which is not what I intend. But if that's it, and if no one's got any other questions, I obviously just want to say thank you very much for tuning in on a Tuesday night. And yeah, let's see how the next few days take us. You know, historically volatile times around halvings anyway. Don't think we're going to 100k on Saturday morning because the halvings happened. I do expect it to be volatile. It's a news event. I'm sure buy the rumor, sell the news will be the case. But think of the bigger picture. Think of where we're going in 12, 18 months time, and have a look. If you're ever doubting yourself about the power of what Bitcoin can do, have a look at how prices acted after previous halvings. And I totally forgot to do it. But go on Twitter, X, whatever you want to do it. Go on Coinbase and have a look at their new halving ad. That will give you some confidence that actually, you know what, the price is going to get there. Let me see. I know I'm on my face cam. Sorry, I should have done it. Got to try and find it now. I'll put a link definitely in Discord for everyone if you haven't seen it. It's got a scooter on the front of it. I won't bother wasting your time playing it because I'm sure the sound won't work, but I will post this in Discord. This is the one here. And that will just give you a perfect analogy of what price is like after a halving event. But other than that, thank you very much. Enjoy the rest of your evening, and I will see you all soon. Cheers now.